Hi friends, today we are going to discuss another topic. Our topic name is Theory and Base of Accounting. Theory and Base of Accounting. This is the next topic of the accounting. We discussed in the previous chapter that accounting is a science. It is practiced universally. That means if you are working everywhere in the world, if you are working everywhere, the accounting system is same in everywhere. No change for the accounting rules, that is uniformity of accounting. In order to ensure the uniformity of accounting, the various accountants developed many doctrines. These doctrines totally we can call as generally accepted accounting principles. It is otherwise known as GAAP, GAAP. The main purpose behind this theory and base of accounting is to ensure the uniformity of accounting. Accounting is a science. It is practiced universally in everywhere. To ensure the uniformity of accounting, the various accountants made by their continuous effort making various reports. These various reports are useful internally and externally for making different purposes. These internal and external report we can call as generally accepted accounting principles. Therefore, these accounting principles means some set of rules, some assumptions, some conditions are required. For example, whenever you are working in a company as an accountant or as a finance manager or as a chief accountant, you should know these concepts and these conventions. These concepts and conventions, we can say these are the rules for accounting. Everyone should know the impact. What is this concept says? What are the assumptions? Why these assumptions we are used in an accounting? It is useful for whenever it is useful for working or not. We want to know why we want to know these informations. Whenever we are explaining each and every point, you will understand clearly that one. The main accounting principles we can summarize into two ways. One is accounting assumptions and the second one is accounting concept. Look in the board, we can see here theory and base of accounting. Here accounting principles you can see, accounting concept is there. Accounting concept means basic assumptions. For example, whenever you are preparing a financial statement, for an organization, you have to do some assumptions. Then only the financial, what will be the materiality and what will be how you recognize an income, how the expenses will be charging, all these informations you need to understand perfectly. That is why these are assumptions. For a simple example, stock is valued at a cost price or market price. This is an assumption we are doing for that one. Another one, just only for an example, going concern concept. This concept says whenever you are working in a company, you are doing all the accounting works, each and every transactions you are recorded in the books of account on the assumption that the business is going for an indefinite period. Same way, another assumption is there. Once one method you selected, you have to continuously use that methods. That is the principle of consistency principle of conservatism, playing a safe, money measurement concept, cost principle. Many concepts and conventions are there. These are the examples. Look here, accounting concept means basic assumptions which are applied in an organization while preparing a financial statement of the company. Then we have accounting conventions. Accounting convention simply means this is the outcome of accounting practices. Whenever you are practicing an accounting system, what is the outcome? That is known as accounting conventions. Let us we can discuss one by one. What are the main accounting concept? What are the concept here? The first concept says that going concern concept. One of the most important concept and the first concept is going concern concept. Undergoing concern concept says the business is going for an indefinite period of time. The business is going for an indefinite period of time. There is no intention to close the business. You are recording all the transactions on the basis of this going. For example, depreciation, stock valuation, every transaction, deferred revenue expenditure, treatment of majority of the expenses and the majority of the incomes, booking of the assets, every one is based on going concern concept. Undergoing concern concept says that the business is going for an indefinite period of time. We cannot say the period of time. It may be tomorrow or maybe after 5 years, maybe 2 years. Now we cannot say. Therefore, we are recording each and every transactions on that base. That is known as going concern concept. Number 2 says that consistency assumption. Consistency assumption says that once you selected one method for the treatment of depreciation, you have to follow that method continuously. When you select a depreciation method, you know many depreciation methods are there followed by the organization according to the nature of the activities of the companies or organizations. So whenever you are taking on depreciation method, you have to consistently follow that one. One simple example, there is straight line method is there. There is a diminishing balance method is there, depreciation. Suppose you are selecting for straight line method, you have to continuously use that method. Otherwise, your comparison will be meaningless. That's why we are saying consistency principle says that once you selected one method, that method you have to continuously use to that one. Otherwise, your comparison will be no use. Therefore, method should be consistency. Number 3 we can say is that accrual conception. You know, we have 2 types of accounting is there. One is cash based accounting and the second one is accrual based of accounting. Normally we have 2 types of accounting. One is cash based accounting and the second one is accrual based of accounting. Cash based means only cash received, then only you will record it in the books of account. Whenever you are paying cash, then only you will record it in the books of account. That is, cash is coming and cash is going. Pure, the transaction is related with the real cash only. When cash realized, at that time only you will record in the books of account. But according to GAAP, all over the world follows accrual base of accounting. Accrual means due but not received. For example, there is a credit sales is there. Money is not received, but it is a sales. That is means whenever the transaction takes place, we will record in the books of account. We never think about the money received or not. That accounting system is known as accrual based accounting. 2 systems of accounting is there. Accrual based of accounting, sales or purchase. Maybe you are purchasing goods on credit basis from the supplier. Maybe after 3 or 4 months only you will pay. Payment is different story. Transaction purchased or not, then it will be recorded. That accounting system is known as accrual, due but not paid, due but not received. That we can say accrual base of accounting. According to GAAP, always says that international level of accounting also says that we have to follow accrual basis of accounting. That is why all over the world, most of the companies, all the companies, not most of the companies, all the companies are preparing its accounts based on accrual based accounting. This is the 2 types of accounting. Next, we can discuss about accounting conventions. We have many conventions. Accounting conventions are otherwise known as accounting principles. These accounting principles and these conventions are followed by all the organizations in the world. We can discuss one by one accounting principles. What is the outcome of these practices? We can check it one by one. First point is accounting entity or business entity concept. First point of this accounting principle is accounting entity or business entity concept. Accounting entity or business entity concept says that the business and the owner are separate. That means we have to prepare separate accounts for the business and separate accounts for the owners. They are separately or independent people. Business is independent and owners are the independent. not to try to mingle the transactions with owners with the business. It is not a good. But we know that it is inconvenient, or sometimes it will be difficult for small scale organizations. But partnership firms and a company form of organization can do that one. For effective control and monetary checking and cash inflow and outflow correctly checking, we need business entity concept. When you are preparing accounts for a company, owners are the private people. They are investing money into the business, we know that, but that is their kind of investment is there that we can treat as a capital. Therefore, we have to prepare separate accounts for both the parties. But it is very difficult for small organizations, but we can conveniently employ it in large organizations. It will be possible. That is business entity concept. Number 2 says that accounting period. We know that there is a life period for an accounting of an organization. Accounting period is the second one. Accounting period says that life of the business or the life of the accounts. Normally, most of the organizations' accounting period is 1 year. The period in which accounts are closed in a particular time is there. That time lag is known as 1 year. Normally 1 year, that is known as accounting period. Number 3 is money measurement concept. You check any transaction in the accounts, it is related with the money only. That means we are recording all the transactions with related to money only. For example, purchase of building, purchase of machinery, paying rent, salary, insurance, everything. You check it, we can measure in terms of money. That concept is known as money measurement concept. The next point is full disclosure principle. You know, whenever you are preparing the books of account of a company, whenever you are preparing books of account for a company, you have to disclose all the known factors truthfully and perfectly. But it does not mean trade secret should be disclosed. Whenever you are preparing financial statement or whenever you are preparing accounts for a company, you should clearly disclose all the points truthfully and perfectly. Perfectly, you have to disclose all the informations, but it does not mean secrecy of the business. There is no need for the secrecy, you can keep it as it is. But the non-factors, you have to disclose perfectly. This is known as full disclosure. Second, our next point is materiality principle. What do you mean by materiality and immateriality? If a decision maker is using that information for the decision making purpose, we can say that this is a material information. Some informations are material and some informations are immaterial. If a decision maker using that information for his decision making, that information is known as a material one. Immaterial means that is not useful for the decision making purposes. Small organizations, even small transactions also material one. But big organizations, only valued items or big amount will be treated as a material item. That is the example of materiality. The next point is prudence or conservatism. Whenever you are preparing books of account for an organization, you have always expect some losses. Anticipate loss, then only you will get the profit. Simply we can say playing is safe. You know, all necessary steps should be taken to cover the loss. Chance of loss is there. We are expecting some loss. Then only you will get a profit. For example, we are starting a business. We are making n number of provisions. Provision for depreciation, provision for doubtful debts, provision for some other items. Many provisions we are making. Why? We don't know. It will be come or not. It will be happened or not. That is known as conservatism, principle of conservatism or prudence. That means playing a safe. Okay, one expense happened, we can say, oh, there is a provision is there, we already keep that one, then it will be okay. This is known as principle of conservatism. The next one is cost concept or historical concept or cost principle. We can say historical concept or cost principle. Normally in accounting, whenever you are recording the transactions in the books of account, an asset is purchased, you will record it, its cost in the books of account. You are recording only the cost at the time. Subsequent years, you are following that cost only. You are not checking the market value of that particular asset. You are charging the depreciation based on that value. You are not checking the market value. That is known as cost principle or historical principle. Then, whenever you are preparing books of account for an organization, there should be matching principle should be there. Matching principle says that all expenses and all income should be matched. More simply, we can say current year income can be compared with the current year expenses only. We cannot compare current year income with the previous year income also. Some incomes maybe you are booking in the current year. No. You should, whenever the comparison should be effective one, current year, what is the current year? 2020, what are our incomes? 2020, what are our expenses? There is a proper comparison is there. Otherwise, the auditors will capture you. Therefore, whenever you are preparing books of account or the financial statement, there should be a matching principle. All the expenses should be matched with the current year income. Current year income should be compared with the current year expenses only. Otherwise, your financial statement is wrong. Your report is also wrong. The next one is dual aspect concept. This one we already discussed in the part 1. Dual means double entry principle. Each and every transaction there is two aspect is there. One is the receiving aspect and second one is the giving aspect. This receiving and giving is known as dual aspect. Whenever you are purchasing an asset is coming to the business and money is going out of the business. This is dual aspect concept. Next one, revenue recognition. Revenue recognition is the most important principle of accounting. Revenue recognition means the period at which revenue is realized should be taken into consideration. The period at which revenue is recognized or realized in the books of account should be recorded. For example, we can say whenever we receive an order, it is not a revenue. Whenever that order is executed, then only it will become our revenue. Whenever you received an order, it is not a sales. Whenever that order is executed, it will become our sales. That means the period or the point of time at which the revenue is recognized or earned should be recorded in the books of account. That is known as revenue recognition. Then the last point is verifiable objective. You are the accountant of an organization. You are recording daily n number of transactions in the books of account, paid rent, paid salary, paid electricity, paid telephone. Whenever you are recording any transaction in the books of account, there should be a supporting document should be there. Without supporting documents, without proper records, you cannot pass any transaction in the books of account. If you are doing that one, the auditors, independent people are coming. They will check what is this transaction, where is the approval, who authorized to do that one. There is a problem will happen. You will be the responsible person. Therefore, each and every transaction in the books of account should be verified by an expert person known as auditor. Therefore, while passing any transaction in the books of account, supporting document should be there. This is a mandatory one. Therefore, these are the points of accounting principles. Next, we can discuss about what is accounting standard and what do you mean by IFRS. Accounting standard means a set of guidelines. Whenever you are preparing the books of account and organization, you need a guidelines. Guidelines means some rules, framed rules. Based on these guidelines, you are preparing your accounts in the books of account. You can see here, accounting standard are the guidelines generally accepted by the accounting principles. This is generally accepted accounting principles followed all over the world. And this is used for the presentation of the financial statement. You have to present your financial statement in a books of account. You have to show the financial statement. You should see some rules will be there. Some principles are there. Set of rules. These set of rules are known as accounting standard. Sometimes we are saying this is not included in the accounting standard. Not allowed to do this one. That means it is required for that one. For this accounting standard developed by International Accounting Standard Board, IASB. They are known as principle based accounting standard. This accounting standard is based on principles. That is why this is principle based accounting standard. Therefore, 2 points are there. One is accounting standard and second one is IFRS, International Financial Reporting Standard. That is IFRS. Accounting standard, a set of guidelines, generally accepted accounting principles that are followed for the preparation and presentation of the financial statements. And IFRS means accounting standard developed by, these are some standard, some rules developed by International Accounting Standard Board, International Accounting Standard Board, that is IASB. Therefore, we can say IFRS is a principle based accounting standard. For the +1 students, just a brief explanation only, they want to understand what is accounting standard. Okay, set of rules developed for them. They are it include going concern concept, accrual conception, some rules, depreciation methods, everything will be there. Same model IFRS is also there. Internationally accepted financial reporting, how to prepare international level financial reporting, what are the rules. International financial reporting says this should be taken like this only, depreciation will be that one, revenue recognition will be this one. So many points will be coming there. Detailed you will study in the higher classes. For example, if you are going for a professional courses, you will have to do all these detailed. This is the topic from this chapter. Thank you.